Hello traders and happy FOMC Fed day. Now the market is charging into the Fed today, risk bid. You've got US equities doing exactly what US equities do, and that is go up, raging bull market stuff. Nasdaq, S&P, new record highs. Almost sounding like a broken record on what's going on with US equities. But anyway, the big story for US equities though was NVIDIA. So yesterday, CEO of NVIDIA was at a conference, did a keynote speech at the conference, and the market absolutely lapped it up. Took NVIDIA shares 5% higher. It is almost a $5 trillion company. Absolutely unreal. Very hard to say much about what's happening there. Anyway, and yes, it is leading the market. Now, for FOMC, what can we expect? Obviously, yes, rate cut, 25 basis points to take the Fed funds rate down from 4 down to 3.75%. That is not going to move the market. Because that's priced in. The market has expectations for more Fed rate cuts. They are pricing in another 25 basis points for December. So the market is expecting that the Fed is going to continue to signal more rate cuts and be more dovish. So give us a dovish cut. So that's where potentially we might see a little bit of action. So whether or not the Fed actually meets that market expectations of dovishness. The other thing that the market's going to be looking at is a decision on quantitative tightening. The Fed has been reducing its balance sheet since 2022, like 2022 for a few years. So it's letting a lot of the bonds roll off its balance sheet. And in doing so, it's a quasi form of tightening. So actually stopping that or tapering that is obviously then going to be the opposite of that. It's going to provide the market with more liquidity. So there are some issues with that. When obviously more liquidity comes flying into the system, that potentially is inflationary. So one of the things to watch out for in this Fed meeting is probably going to be the decision on QT and how the bond market reacts. US 10-year yields, they have been sitting based just around 4%, a couple of basis points above, below, waiting for some directional move there. But potentially, if the bond market sniffs that what happens next is going to be inflationary, we could see those US 10-year yields spike. So I think that's probably going to be the most meaningful move if we do base yields again at these low levels and go higher. So let's see. Anyway, moving along, today is actually a pretty important day. Local markets here in Australia. We do have third quarter CPI coming out. There is an RBA meeting next week on November the 4th, Melbourne Cup Day. Market expectations now, because the unemployment rate has spiked up to 4.5%, that the RBA will cut rates. The market's expecting with a probability of around 70%. So it's not a slam dunk. Waiting for this number. So the market's going to be focused on two things: the RBA trim mean year on year. So last quarter that was at 2.7%. They're looking for that to remain pretty much stable at that level. Quarter on quarter, they're looking from that to actually increase from 0.6% last quarter two, to 0.8%. So look, I'd suggest that the market would want at a minimum for the CPI prints to come in on expectations. If we do get a number that comes out above expectations, especially if that year on year RBA trim mean goes towards 3%, that is going to probably rule out that rate cut. Obviously, the Aussie dollar is going to love that. Aussie dollar at the moment is bid again. It's bid on two things. One is obviously what's going on with risk. Risk is absolutely flying. Second thing is obviously that the relations between the US and China and the trade deal that obviously and the Xi meeting with Trump tomorrow is all very positive stuff. So we're back up towards almost 66 cents, trading around 65.80 as I speak. So yes, a good number here. Aussie's got tailwinds. It could fly higher. But yes, again, obviously, if it comes out below expectations, we're going to see a lot lower Aussie. But I think what we've seen with the month-on-month prints the last few months that they have gone up and they're back up at 3%. That is probably a low probability of getting something below expectations. So I think the higher probability is it's going to be above expectations. So bias long Aussie into that. ASX has been flying very high, above 9,000. It's not going to like a higher number. So we could see that lower. But anyway, no doubt we're going to see some volatility in Aussie markets today, pre-Fed. The other thing to note as well, just later on tonight, at the same time, is that we have, before the Fed, you've got a Bank of Canada meeting. They are looking, they're going to cut rates again, 25 basis points, 2.5% to 2.25%. Market's obviously going to cheer that. After the market closes, the Fed meeting, we've got quite a few of the big tech stocks third quarter earnings. So the fun never ends. So look, today and tonight is going to be a big night for markets and for traders. So good luck with all of that, and we will check back in with you shortly.